here today with legendary investor Jim Rogers at our Fourth Capital investment seminar in Hong Kong. I have a couple of questions I'd like to ask you, Jim, specifically. It seems to me that the traditional way of investing has almost been turned on its head because we think of cash as being safe, then bonds and equities as being high risk. Given that interest rates are so low, record lows, bunds are basically yielding zero, for more cautious investors who may be looking to take some gains out of the equity market, the traditional route would be to buy bonds, but that seems to be suicidal. What would you do in this situation?
Well, first of all, you're exactly right. Bonds are suicidal. I mean, you're guaranteed to lose money. They will pay you negative rates of interest. So bonds in most parts of the world are negative yields or minuscule yields. So you're exactly right. The alternative, if you want to be safe, but there's no such word as safe, Robert, in the investment world, would be cash. But what kind of cash?
Exactly.
If you'd put all of your money into Icelandic krona a few years ago, you thought you were safe and conservative, and you lost everything. The yen, if you put all your money in yen 3 years ago, you would be down 50% right now. So you have to get the right cash. The main answer is get the right cash in the context of what you're talking about, and or invest in what you know. If you know a lot about something, don't listen to me. Invest in what you know a lot about, because you'll be able to answer that question better than me. Okay. But the only thing that I know which is less unsafe at the moment in that context would be cash.
Okay. In times of trouble, money flows either into the US dollar or gold. Gold obviously hit its peak a number of years ago. It's dropped down dramatically and it's bumped along. What's your view on gold? I
own gold, Robert. I plan to buy more gold next year or two if it goes down some more. And when it goes down, if it goes down, I plan to buy a lot more gold. Gold, before this is over, will end up in a bubble somewhere along the line. Then, of course, we'll have to sell our gold if it does turn into a bubble. I'm not buying now. I'm waiting for a better opportunity.
Okay, and then one final question on the more speculative side. We heard today about potential trades. What would be your one best bet for the year?
Robert, I don't have a better answer for you than I did for the other person. What did I say? I said I would buy Russian government bonds in rubles because they yield so much, and I'm convinced that it's not a disaster, that it's not a debtor nation like the U.S. I mentioned sugar. I would invest in sugar because it's so depressed. There was something else I mentioned. I can't even remember.
Iran.
Oh, Iran. I would buy shares in the Iranian stock exchange. But you got to do it soon, because soon, if it opens up, everybody else is going to be there too. In fact, it's already going up in anticipation. But Iran, which has been in the doghouse worldwide, in many countries for a long time, would probably be a good place to invest. But, you know, if I have a chance to think about it, I'll probably come up with a better answer.
Very good. Jim, thank you very much for your time.
That was my pleasure, Robert. Thank you. Thank you.